Welcome back, everybody, to the Deep Dive. Today we're diving into CarParts.com's Q3 2024 earnings call. We've got the transcript right here, and we've got some market data. So let's just get right into it.
Yeah, I think this is a very interesting one. CarParts.com trying to kind of transition and focus on profitability over just growth. I mean, that's a tough move in this market.
Absolutely.
Yeah.
And right off the bat, we see this really interesting dynamic, right? The revenue's down, but margins are up. They reported a 13% drop in revenue year over year, ended up at $144.8 million for Q3.
Yeah, that's a big decline. That definitely raises some eyebrows. But you got to look at the bigger picture here, right? They've managed to increase their gross margins to 35.2%, which is up from 32.9% the previous year.
Right.
And they did this through, strategic price increases and some lower product costs.
So they're trying to make each sale more profitable, even if they're selling a bit less overall. But the question is, can they keep attracting customers with these prices?
Yeah, that's the gamble, isn't it? They're really betting on a shift in their customer base. They want to attract a more affluent customer, someone who's a little less sensitive to price hikes and more interested in those premium brands.
And they're putting their money where their mouth is on this, too, because the earnings call specifically highlighted their impressive growth of OE premium brands, which is up 24% year over year, and also European brands, which is up 23%.
Wow.
Yeah.
That's a pretty good indicator that their strategy might be working. But, begs the question, like, how much of this market can they really capture? And
Right.
how loyal are these premium customers going to be?
Yeah, I mean, it seems like they're also doubling down on enhancing that customer experience to support this shift. They recently completed a major website overhaul, migrating it to a cloud-based infrastructure.
That's huge. In today's digital world, that's a great move because this new platform is going to allow them to roll out new features much faster. Things like AI-powered product recommendations. They even teased a loyalty program coming in the very near future.
Right, and we can't forget about their mobile app, which has racked up over 550,000 organic downloads. So it looks like they're trying to cater to customers wherever they prefer to shop.
Absolutely. I mean, it all points to them trying to build a more robust and engaging online experience. And for a company like CarParts.com, that's going to be key for attracting and retaining those higher value customers that they're really going after.
But they're not just sticking to that core e-commerce platform. They're exploring a lot of different new revenue streams as well, which is pretty interesting.
For sure. For sure. Getting creative here. They launched an eBay store up in Canada, partnered with Simple Tire to offer tires and installation services, and they're even piloting a program with Amazon to fulfill their private label parts.
Wow, it's like they're trying to squeeze every single drop out of their existing customer base and website traffic. They're even experimenting with new service offerings, like product and shipping protection plans.
It's a smart strategy, especially when you consider the headwinds that they're facing, right?
Yeah.
Rising freight costs are always a concern. Competition and performance marketing is heating up, and consumer spending is still very cautious.
Yeah.
And, we can't forget about the recent hurricanes.
Yeah. I mean, that definitely didn't help.
That was a big hit. It's a stark reminder that even with the best planning, external factors can throw a wrench in things.
That's right. And CarParts.com is definitely in a tricky situation. But what's interesting is their stock price actually jumped by almost 12%, 11.77% after this earnings call, despite the revenue dip.
Yeah, that's pretty interesting, right? What do you think about that?
I mean, it seems like investors are really buying into this long-term vision. They're projecting full-year revenue between $595 million and $600 million, with a gross margin between 33% and 34%. But, the big headline is, they're going to try to reach profitability and a positive adjusted EBITDA in 2025.
That's right.
Which is a pretty bold goal, considering all the challenges we just discussed. It'll be fascinating to see if they can actually pull it off.
It's definitely a situation that bears watching. Will the success of these new initiatives and their ability to navigate this kind of choppy economic water, will it pay off? It's something we got to follow. I think it's worth digging a little deeper into their efforts to enhance that customer experience, because that seems to be like a cornerstone of their strategy.
Oh, yeah, for sure. I mean, that complete website replatforming that they did was a pretty bold move.
It was.
I mean, it must have taken a ton of resources and time.
Yeah, it definitely did. But it seems like it's starting to pay off. They've highlighted just the improved agility and the speed that they can implement these new features.
I mean, just think about the potential impact of those AI-powered recommendations.
I know.
If they can effectively guide those customers to the right parts,
Right.
It could boost sales and customer satisfaction.
Absolutely. And a well-executed loyalty program
Oh, yeah.
could be a real game changer, Rewarding those repeat customers and offering exclusive deals is a proven way to build that loyalty and drive those repeat purchases.
And the fact that their mobile app already has over 550,000 organic downloads just shows that they're really tapping into that growing preference for mobile shopping.
It's all about, providing that seamless and personalized experience no matter how the customer chooses to engage.
Right.
And that's essential in today's landscape.
Speaking of expanding their reach, their move into Canada with that eBay store is an interesting development as well.
Yeah, it's a pretty clever way to tap into a new market without having to put those massive upfront investments into infrastructure.
Right.
I mean, they're essentially leveraging eBay's existing platform and that customer base.
Yeah. And then their partnership with Simple Tire gives them a foothold in the tire market.
Smart Move tires are a high-demand product, and by offering the installation services as well, they're providing a much more comprehensive and convenient solution for their customers.
Yeah. And then there's that pilot program with Amazon Fulfillment for their private label parts. That one really caught my eye.
Yeah, that's potentially a game-changing move, tapping into Amazon's vast customer base and that logistical prowess
Right.
could really expand their market share. But it also comes with some risks, They've got to carefully manage their brand presence and that pricing strategy within Amazon's ecosystem.
Yeah, for sure. And let's not forget about those new service offerings like the product and shipping protection plans. It's a classic play in e-commerce, boosting that average revenue per customer by offering those value-added services.
It all comes down to finding those creative ways to increase profitability from each transaction. But, as we've discussed, they're facing some pretty strong headwinds in this current economic climate.
Yeah, rising freight costs are a challenge for everybody in e-commerce.
Yeah.
And carparts.com is no exception.
They're tackling that head-on with their new Las Vegas facility, which is now fully operational.
Right.
And this strategically located hub is designed to enhance operating leverage, streamline their processes, and really shorten those shipping times to customers in that region.
It's a big investment, but one that should start yielding positive results in the coming quarters. And I mean, they're even incorporating AI-powered systems within that warehouse to optimize picking and packing.
Those kinds of technological advancements can make a big difference in managing costs and improving that bottom line.
Yeah, it's encouraging to see them making these moves, but I mean, let's be realistic. A lot hinges on their ability to execute this strategy effectively.
It's a delicate balancing act. Managing costs, enhancing that customer experience, and exploring new growth areas are all critical pieces of the puzzle.
Yeah.
And they've got to excel in all three to reach those ambitious goals.
And then don't forget about those external factors that they have limited control over, like the overall economic climate and those unpredictable weather events.
Very true. But what I find fascinating is despite all these challenges and these uncertainties, there's a real sense of optimism surrounding carparts.com.
Yeah.
Their stock price jumped after the earnings call, even with that revenue dip. That suggests that investors are looking past the immediate numbers.
They're buying into that long-term vision, the potential for carparts.com to emerge as a leader in this changing industry.
It's a testament to the power of a clear and compelling strategy. They've articulated their goals, they've outlined their path, and they're taking decisive action. Now it's all about execution. The coming quarters are going to be critical in determining whether they can deliver on those promises.
Yeah, it's a reminder that business is more than just spreadsheets and algorithms.
It's about people, the customers you're serving, and the employees who are driving your vision. And those are always the hardest things to predict and manage.
Absolutely. Speaking of managing, let's go back to those cost-cutting efforts for a second. They're coming off a year of, heavy capital expenditures and headcount reductions.
Yeah.
How's that all playing out?
Well, it looks like those measures are starting to show some results, As those expenses kind of roll off, their free cash flow is expected to improve, quite a bit in 2025.
Okay, so that's a good sign. But as we've been discussing, their success really hinges on striking that right balance.
Exactly. They need to keep those costs under control while still, putting money into those customer experience upgrades and exploring those new revenue streams. It's a lot to juggle.
Yeah, a lot of moving parts. And we can't forget about those external pressures that are out of their hands. It's like the overall economic climate. I mean, those hurricanes were a big reminder of how Mother Nature can throw a wrench in things.
Oh, for sure. But here's what I find interesting, Despite all those challenges and uncertainties, There's a real sense of optimism around carparts.com. I mean, their stock price went up after the call, even with that revenue dip. That tells me investors are seeing beyond just the numbers.
They're buying into that long-term potential, the potential for carparts.com to come out on top in this evolving industry.
It's a testament to having a clear strategy. They've said what they want to do, how they're going to do it, and they're making moves. Now it comes down to execution. The next few quarters are going to be key in determining whether they can actually deliver.
Okay, so for our listeners who are keeping up with this story, what should they be looking out for in the coming months?
Keep an eye on those new initiatives. Is that website redesign leading to more conversions and happier customers? Is that loyalty program gaining traction? Are those partnerships with Simple Tire and Amazon actually bringing in revenue? And maybe most importantly, are they moving towards those profitability goals? Those are the things that are going to tell the story.
All right, so it seems like carparts.com's journey is far from over. We'll definitely be following along to see what happens.
Absolutely. And we'll be back with more deep dives, breaking down those numbers and helping you make sense of the business world. Until next time, stay informed and stay curious.